What's up everyone, Dylan here. I wanted to hop on to do a short and sweet analysis video for a short and sweet holiday week. Uh, to start off, tomorrow is Christmas Eve, so the stock market will have an early close at 1 p.m. Eastern Time. And then the following day on Christmas, the equity market will be completely shut. Okay, so as I mentioned last week was the last full week of the year, so this week and next week will be shortened holiday weeks. Okay, a lot has happened since last Monday, which was the last time I posted a video, and we are going to talk about it. Okay, so to start off, we had a very, very large sell-off that occurred on Wednesday, which was the Fed day. In fact, it was the biggest FOMC day sell-off in the history of the S&P 500 and the largest red day of this year. Okay, so clearly a lot of action. Okay, why did that happen? Okay, I'm going to go like this for the time's sake of this video. Read this, pause this video and read this. That's some color on the the underlying effects of what occurred on Wednesday and why that big of a move happened. Okay, but like I said, stop that, pause it, and read it if you want. But I want to bring us back to last week's video to kind of give some signs that kind of acted as a telltale sign that a sell-off would occur. Now, did I think that it was going to be that big and that it was going to be the largest sell-off of the year? No, not necessarily. But for future reference, if you see these types of pieces of context going forward, right, it can be a good hint that a pullback might occur. So let's get back into that. So to start off, I quoted Adam Crisafulli last week, and I said, this is what he said. He said, the deteriorating breadth and pockets of extreme excess and froth are warning signs about the unsustainability of the status quo. Then he went on to say, either the tech melt-up soon loses steam and the rally broadens, or, this is what I thought, or the entire equity landscape will be vulnerable. Okay, and that's basically what happened. So he also said that near-term market internals are not appealing with deteriorating breadth and signs of concentrated froth. So we went into that. And more importantly, I talked about the VIX towards the tail end of last week's video. So I'm going to go back to that and show you guys. Okay, so this was the previous VIX contract, which was the December contract. Since the last time I made the video, it has changed to January. Okay, but I wanted to show you this one because this is exactly what I showed you on last week's video. I have not changed the look of that trend line. That black trend line is what I am looking at. Okay, essentially I said, hey, if the VIX is able to break above that trend line, that consolidation, sideways movement, break out of that resistance trend line and sustain value higher, what that will do is it'll likely change the sentiment from buying the dip on the S&P to selling the rip on the S&P. Ultimately, being a weight on the S&P's shoulders, giving it more pressure and ultimately making it pull back. Okay, and that's exactly what we saw. So on Tuesday we got a breakout of the VIX, and if we fast forward to the current contract, which is the January, you can see, right, going back to that Tuesday, Wednesday, you can see that's exactly what had occurred. It broke out of this consolidation area, right? Broke out of that trend line that I told you guys about the last time I posted, right? And this trend line on the new contract doesn't look as good, but we'll go ahead and make this resistance at like 16.45, 16.5. And you could see when I posted it on Monday, right? I posted the last video on Monday, it had broke out and it never looked back. And that is the reaction we got. And as that move occurred in the VIX, right? I posted it in that Discord post. I said, plus you had the VIX was putting additional pressure on ES as dealers were forced to sell ES to hedge their short VIX positions, right? So this breakout of the VIX futures puts additional pressure on the S&P and ultimately gives it more selling pressure to the S&P. Okay, so that all of those combination, all that whole combination of different factors that I wrote in that Discord post all kind of came together, and that's why that move in the S&P was so violent and so aggressive. Okay, now where did that take us to? Okay, why did the S&P bounce? Where did it bounce, right? What was the significance behind the area that the bulls came in and gave some stability to the overall market? And there's no coincidence where it bounced, right? Two major pieces of context aligned, okay? First off, we had the 100-day moving average on the S&P futures, right? We came right into that, right? If I zoom in here, you can see the low of Friday's move was 5,866, okay? And that line lined up with about 58.72. So it broke below by about 6 handles and immediately came back up, recaptured, and from there on out, it never looked back, as I said. So I'm going to go ahead and mark that at 58.72 just to give you an idea on a lower time frame, right? If I go to, say, like an hourly chart, you could see it got right into that general area, which was the 100-day moving average. And, it came into support and bounced from there. On top of that, it also had an SOX support, which I often talk about on this channel. It's the Philadelphia Semiconductor Index. And I've told you guys a few different times, I say, there's a quote that goes, where stocks go, stocks go, okay? So essentially, SOX is a high beta name, meaning it has a lot of influence. Usually, it basically it's the telltale sign of where the overall market, mainly NASDAQ, will follow. So if SOX is making a large move or coming into a key area of support or resistance, and it respects that area of support resistance, chances are the NASDAQ will follow in its path, and then make the S&P fall on its path as well. So what trend line am I referring to? I've showed this on my channel. This trend line stemming all the way back from October of 2023. Very clear, right? Every time it comes down here, it has supported price. Okay? Very, very, very clear. And the last time it did was when? Friday. When S&P also hit the 100-day moving average, okay? I'm going to bring this down to a 4-hour, and you could see, right? You could see that that is exactly where bulls stepped into play. So SOX, upon market opened up right at that trend line. Bulls stepped in very quickly, and that was ultimately the low before it moved. What are we at now? It's since the test, it's up about 5%. Also, Nvidia is starting to really participate in this rally as well. For a while, Nvidia was really lagging, so it was in a downtrend up until last week, whereas other names such as like Amazon, Apple were all kind of resilient, moving higher, making all-time highs. So the fact that Nvidia is starting to catch up is a good thing for this market. Okay, December is supposed to be an easy year per se, because it's since 1928 the vast majority of Decembers are bullish, especially in election years. Okay, in fact, coming into where we're at now, since 1969, the last 5 trading days of the year combined with the first 2 of the following year have yielded an average S&P 500 gain of 1.3%, which is a period known as the Santa Claus Rally, according to the Stock Traders Almanac. Okay, so that's where we are now. Okay, is that going to be the case this year? Who knows? But seasonality wise, in terms of inflows and other factors, especially in election years, tend to move higher from here. Now, that doesn't mean we can just put on a blindfold and hope for the best. Okay, so I'm going to go ahead and outline some key areas that I will be looking at to help me kind of navigate where the market heads next. Okay, first off, I wanted to point out the anchored VWAP from all-time highs on NASDAQ has been acting as a strong resistance. Okay, so I'm going to go ahead, click the anchored VWAP, which is just the default version on TradingView. It's not one of those custom ones. Okay, and you could see when I extend it from the all-time highs, you could see, we'll drop it down to a 1-hour chart, you could see that it has been acting as resistance on both Friday and today, right? Each time price gets up there, it has peeked its head above, but very, very quickly has come off and failed to sustain value above that. So if you're a bull, you want to see the NASDAQ break above that anchored VWAP and sustain value above. Okay, that's very, very important. If it can do that, I would expect the S&P to ultimately come up to the previous key support, which lines up with 6120 to 6110. Okay, so I'm going to go ahead and draw 6120. Okay, 6120 to 6110, and you guys will see what I'm talking about. This was previously deemed as very, very important support before Wednesday's breakdown. So you could clearly see before Wednesday's breakdown occurred, okay, price was coming into this area numerous times, several different times, and each time was supported very, very clearly. Okay, then Wednesday came around and, because of the Fed decision and Powell's press conference and, outlook into 2025 and, among with other factors that I wrote in that Discord post that I showed you guys, that previous area of support got breached and the market absolutely, tanked. Okay, so going forward, that has not been retested. Okay, so if the NASDAQ, like I said, if the NASDAQ is able to break above that anchored VWAP and sustain value higher, I would imagine that the S&P, especially if the S&P takes out Friday's high, right, and sustains value higher, I would imagine that the S&P will come up and retest that general area, where I would expect the sellers to try their best to defend. Okay, and this general area will probably also line up with this area of previous resistance as well. It might not come perfectly, but we'll see. So definitely keep an eye up to this general area for a retest. And then to the downside, there's not much, if I'm going to be honest, to the downside, because Friday's move was so vertical and it didn't really have any areas of consolidation where price really, respected a few different areas. So for the time being, I will be using this general area on the NASDAQ that has been acting as nice support the last few sessions. Okay, so this lines up with about 21,512-ish, right? You could see kind of, two different lows, one right there and one today. So I would keep an eye on 21,512 to the downside. If it loses support there and then, continues to stay below, I wouldn't be shocked to see the selling pressure, strengthen. Okay, so that's it for me. I wanted to say I appreciate the 4,000 subs. It's a nice milestone, and I promised that you guys that for every 1,000 subscribers that I get, I'll do a live webinar on YouTube, and I have picked January 6th to do that. I'll probably do it January 6th around 6 or 7 p.m. Eastern time. I'll have a more definitive, plan and schedule when I post my next video, which will be next week. So definitely look out for that. And that's about it. Happy holidays, everyone, and I'll talk to you soon. Peace.